Hey everyone, this is Jay, also known as jaynemesis over at eToro.com, where I trade as a popular investor. You can check out my profile and a bunch of other stuff in the bio below if you want to follow me there. This is blog episode number 3, and I'm going to do something a little bit different. I wanted to take a little bit of time to talk about an indicator that I use. It's one of the least popular indicators I've seen in terms of, around on eToro or even on TradingView and things. It's a well-known indicator, but I don't actually see that many people really using it these days. I've been using it for about 7 or 8 years now, and along with other indicators, I find it to be really, really useful, especially on lower time frames. Obviously, as you know, I'm more of a fundamentals kind of trader, so I wouldn't really use technical analysis too much on long time frames anyway. That being said, let me kind of dig into what it is and how it works. So here we have a chart of oil, and I'm going to explain what the indicator is properly and kind of head over to Investopedia to show you in a second. I've taken off all of the other indicators that I had on here, pretty much. I've still got the RSI. But I've left these little orange dots below and above the candles. That right there is the parabolic SAR, parabolic stop and reverse. I'm going to head to Investopedia for a slightly better explanation. Obviously, I'm not going to read through the entire thing. I did search it before because I accidentally recorded this video terribly earlier. So yeah, if you want to read more about it, then obviously you can head to Investopedia or other good reputable sources for learning about indicators and read up on it yourself. So parabolic SAR stands for the parabolic stop and reverse. It's called that because the original intention for it was to act as a stop loss indicator. That's what the stop means. And then the reverse means that once you've been stopped, you actually take a reverse position of what you had originally. So if you were long, you would hit your stop loss and then you would flip into a short position until you are told to stop out again by the little dots. So here is a nice little screenshot example. So basically the way it works is if you are above the price, then you are bearish, you are shorting. And if you are below the price, then you are long and you are buying. And once the dot hits a candle and flips sides and flips up to the top or flips down to the bottom, that is the point at which you get out of your trade. So in this situation, your stop loss on the parabolic SAR would have been hit on this candle here. And then immediately you would have flipped into a bearish position. And this would be your stop loss slowly catching up with the price. So hopefully that kind of helps explain it a little bit. I'm just going to head back out of here, and I think I've kind of already been through everything it says in the little key takeaways here, but you can read it for yourself. A dot below the price means the price is moving up, and a dot below above the price means that the price is moving down. There is a dot for every bar, meaning the indicator is always producing information. This is important, by the way, because it means that you will get a lot of false positives in terms of indicators saying you should flip short now, when actually the price is going flat and it will just go either side of it, kind of zigzagging forever potentially. So it's important to know that this really does rely on there being supporting indicators as well. Dots below the price always rise and dots above the price always fall. This way the dots track the price and will capture price reversals when they occur. This is also obviously very important in terms of making sure that you don't make massive losses on your trades, because if the dots didn't catch the price, I guess they would just be above the price forever, and you would never actually take any profits. Reversal occurs when the dots flip. If the price falls below rising dots, then the dots will move above the price, and obviously the reverse is true as well. Reversal in the indicator doesn't necessarily mean a reversal in the price. PSAR reversal only means that the price and indicators have crossed. That's obviously kind of more of a disclaimer really than anything else at that point. So back onto our TradingView chart. I'll show you the inputs. Really, so most charting software pretty much starts with these as the defaults. So essentially, this is how far behind the price it will start. This indicates how quickly it catches up with the price. The higher the number, the more quickly it catches up. And then this is the maximum kind of like gap between those dots that it can get to, like the fastest speed it will allow it to catch up with the price. So that's basically how that works. I will give you a few more examples later on to explain it a little bit more. So I've got a chart of oil open because I've actually been using the Parabolic SAR on here, along with a few other indicators a little bit recently to track price movements. And unfortunately, I only ever actually trade oil in short because, ethically, I'm not a big fan of oil, so I don't want to be contributing to the price going up and oil being a successful venture for anyone. Personally, that's my own opinion, obviously. But as you can see, it has actually done a pretty decent job, I think, of following some of the big moves in oil recently. We're currently on a 30-minute chart. I'm just going to switch to 1 hour. So talking about timeframes, first of all, I tend to use the PSAR on short timeframes. You can use it on larger timeframes, but if you do, then it's probably worth changing those inputs that I mentioned to have essentially a wider stop loss and slower incrementation. Because obviously, if you're bullish on a stock long term, then you don't want to be hitting your stop loss too early. If you're trading on weekly charts or daily charts, for example. The Parabolic SAR does struggle a bit with really choppy conditions. So, for example, you can see here very clearly that it's not making you any profit on any of these trades, right? It's just flipping either side, and that's why supporting indicators are really useful. On the other hand, of course, you can see here that if you had taken the buy position, even though it's actually way after the move started up here, if you would have taken this buy position, you would still have closed out a nice healthy profit up here. And likewise, this one I find to be a great example of it as well. Catching this short move, obviously you would have supporting indicators to help you make those decisions. But if you had taken this trade and opened the short position here, you would have actually closed all the way down here somewhere for around 33% profit. So pretty crazy returns on what essentially here is a day trade. That's over about 24 hours, that trade. No, it's not. It's over about an hour. What am I talking about? No, it's not. It's over about 24 hours. I'm insane. Please ignore everything I'm saying. Yes, so that's pretty much how it works. One of the things, so I tend to use it on this time frame. Most of all these 3 time frames here. You can see how many times it has would have generated you a profit. This one would have not generated you one. Generally, if the angle is shallow, it's not making you much money. If the angle is steeper, then it's doing its job nicely. And you can see how many times it was effective here in generating you profits. Even this short position would have turned you a reasonable profit, depending on how quickly this candle rose up. And this was, by the way, a pretty freaky candle when this happened. Everyone was a bit surprised by that. Let's talk about the inputs just briefly. So if I double click it here on TradingView, then you get into the inputs. Obviously you can reach it in other ways, but that's how I usually do it. So this is the main thing that you're probably going to change. I actually have never changed these 2 values, I don't think. Or if I have, it must have been a very long time ago because I've forgotten. But I do sometimes change this down to 0.01, especially if I'm looking on higher time frames. So what that does, is you can probably see already, is it keeps it further away from the price for longer. And essentially it widens that stop loss. So here, instead of where it was previously, let's just do a comparison on this little section right here. I'm going to zoom right in, so it's really obvious where this is. So starting at this big candle here, right? So if we use it on this time frame, you would open your short position on this candle. We'll say that you opened it at the top of the wick, and we will say that you closed it here at the bottom of this green candle when it flipped over. So that's a 21.95% profit of a 44 bars, which is 22 hours, so just under a day. A pretty healthy profit. If I change this input to the default, then you can see that actually we hit our stop loss a little bit sooner. We still open the trade at the same point, in this example at least. So we would open it here. And instead of closing it over here, we would actually close it on this candle potentially and make slightly more profit. Now, in that example, it's worked out quite well. But if you move up the time frames to something like a daily chart, you can see that very often you get periods like this where it is really changing for sometimes just 2 days at a time and then flipping again. Obviously, in more oil has been pretty volatile recently, but in more sideways markets, it can be it can really kind of ruin you, to be honest. Like if you were using it here, you would really be in trouble. Let's find a good area here, for example. You know, if you're taking short positions here, you're just losing money, and you would probably end up losing more. I believe the statistics show that if you just use this indicator on its own and no supporting indicators, that it returns less than 40% profits, I think. So what I'm saying is that you're losing money. I phrased that really badly. So yeah, don't take my word for it. Obviously, you know, Google it, do your own research and everything else. But yeah, if we change this back again, then you will see that on these sideways moves, it's actually much more effective to have it wider. Look at all of these trades that were losing before are actually earning you profit now. Again, you can tell by how steep the angles are. So if you're using higher time frames, probably worth having the wider stop loss. Obviously on eToro, you can't actually you know, program this directly in. You can do that with other exchanges and brokers potentially, and essentially have this as your default trailing stop loss. But if you're paying attention to the market, so you're using it on low time frames like I do, then you can pretty much just pay attention and, you know, decide yourself when to flip. So it'll be interesting to see how oil does as we open next week. See if there are some good opportunities there. I think that's just about it on this video. Obviously, this is not investment advice. I'm not telling you all to go and use this indicator. I use it. I enjoy using this indicator and use it in conjunction with several others. But it's definitely one that I quite like, and I don't think is talked about very often. I think that's it. I think that's it, guys. There's really nothing else to talk about in this vlog. I do plan on doing a vlog soon about earnings. Some of you asked for vlogs about some of my favorite stocks and things like that as well. I do want to do all of these things, but obviously it's really busy at the moment. I felt like this was a cool vlog to put up. And obviously very low effort for me because, you know, I know everything about it already, whereas if I'm talking about a specific stock, then I'm going to make sure that I get my numbers a bit more accurate and things, and maybe go and refresh my memory because, you know, I don't look at each of my stocks fundamentals on a daily basis. That would be, you know, impossible. So yeah, it's much easier to talk about something that I do use basically every day, and this is one of them. So thanks for watching, guys. If you enjoyed it, please hit the like button, subscribe, follow me on eToro, obviously, on Twitter. I'm also incredibly active there, and join my Discord server as well if you have not yet done so. Thanks for watching, guys, and I'll see you next time.